Welcome to Insurance Town, ladies and gentlemen. I'm the Mayor, Heath Sharon, and the host of this podcast. I am excited you're here. It's been a minute since I've recorded a brand new episode, so I am excited. I had a good long batch there, so I'm pumped about today's episode. A light bulb came on for me, and it will be a light bulb that'll come on for so many of you guys as you listen to this episode about Parametric Insurance. We had Brian Thompson on several weeks, maybe months back, talking about parametric for commercial. I got the gentleman to come in and talk to us about parametric for personal lines insurance. Yes, something out there that can help you. You're going to love this episode, especially if you sell personal lines insurance and you're wondering how you can help your clients with these large deductibles. So check this out. This one is sponsored by my great friends over at Smart Choice, the fastest growing agency network, hands down, ladies and gentlemen. They love working with independent agents. They love being your partner. They love rolling their sleeves and getting stuff done for you. They do it for you because they love you. They want to help you with higher commissions, lower thresholds. They want to help you with, no fees. It's unbelievable. SmartChoiceAgents.com. Tell them the mayor sent you. Also, my friends over at Canopy Connect. They are the one-click solution to getting those deck pages you need to quote your prospects and onboard your process and intake process. Bringing on those things by having these forms on your website, by having an intake process that you may not have had before that is beautiful, that is seamless, that is awesome. Go to usecanopy.com/Heath and get your demo, get a discount. Or if you want to call in, if you know Nick, if you know Tolga, if you know Casey, if you know any of the great folks over there, Ray for that matter, tell them that you heard about it from here on Insurance Town and you'll get a discount. Guys, I got to get out of the way because I want you to hear this episode. Lastly, I can't tell you how many times I've had people call me and thank me for telling them about this. So Old School Marketing, OLDE, schoolmarketing.com. Yes, we're already into 2025, but it's not too late to get those marketing campaigns rolling, whether it's digital or whether it is doing a direct mail marketing campaign, whatever it might be. We've got you covered with Old School Marketing. Go check them out. Now I'm gonna get out of the way and say, now I'm struggling. I'm gonna jump out of the way. I'm so excited for you to check out this amazing conversation with my main man from Sola Insurance. It's Caleb Burkey. My man, Caleb Burkey. What's going on, brother man?
I'll just living the dream in this crazy insurance world.
Living the dream. Sometimes it's a nightmare, but I give it to you.
Yeah. We don't need to go down that rabbit hole, but yeah.
Yeah, I hear you. And fellow Arkansan just found that out, so that's really cool that we connected. And you're an Arkansan up there in Walmart country is where you are.
That's right, up in Walmart country. Like whenever I meet somebody outside of Arkansas, it's one of two things. I'm 20 minutes from Fayetteville, Woo Pig, or I'm just down the road from Walmart corporate. So that's the only way people know us.
There you go. And so, what are you a Hog fan?
Yeah, so I'll just give you a little bit of background. I was born and bred in Springfield, Missouri. So
okay.
I'm still an Ozarks boy, just the other side of the line. So I grew up a Mizzou fan, but I've lived in NWA for 10 years now. So I've become a Hogs fan. So
there you go.
Just don't hate on me. I root for the Hogs anytime it's not the Tigers. So
okay. Hey, at least you're an SEC guy.
Yeah.
I'll settle for that. So talk to me about let's take a walk down memory lane and tell me how you got into insurance 4 or 5 years ago and what were you doing before that and how'd you fall in love with this industry like I did?
Yeah, so I just dreamt of a little kid of always being an insurance agent,
I call bullshit.
Yeah, you are absolutely right. So
yeah,
my degree was in secondary education. So I started out as a teacher and a coach.
Okay.
My father-in-law was a State Farm C-level executive. And the first day he met me, he said, I'm getting you an insurance. And I said, you're absolutely crazy. I hate insurance. Yeah. I want nothing to do with that. And
not
here
happening.
I am now 10 years later, I'm absolutely in love with it. So, so I got out of teaching and coaching. Went into sales for a few years after that. And then one of my accounts is like, hey, one of my agent is looking for a business development guy. He's like, would you be interested? So I was like, I'm always opened up. And I called my father-in-law. He's like, you should definitely take advantage of this. And so I did. And I came on board with a local independent here where I live at. And I worked for them for a couple of years. I worked with all of our referral partners in the community, bringing in leads for my inside guys to close.
Yeah, that's awesome.
Did that for a couple of years. And then, I wanted to see what was out there. And so I started my own Liberty Mutual agency. I did that for a little over a year, but life things happened and I had to let go of my agency. But I absolutely love insurance and I wanted to stay in that world. So I went the carrier route and I came on board with Sola because I literally was just looking what was out there and I absolutely loved what they were doing with their product. And so I came on board. I was actually employee number one because we're a newer startup and started out with head of sales, but I was also, because we're a startup, I wear many hats. So like I'm also a territory rep for some of our states.
Yeah.
So started out with 4 people and now we're up to 9 people on the entire team. So we've got 3 sales reps now. So we've actually got a little sales team and we're growing all the time. So I just love it because I just love being in insurance. I love what it does. And as a former agent too, I've been on those phone calls where you save a single mom $800 a year on their insurance and they start crying and they're like, I don't think you know what this means to me. I was like, I do, because I worked in a poverty-stricken school district. I know what $800 means to you. So like that's why I do this. I mean, the money's nice, but I do it because I'm able to actually help people. We always get a bad rap, in this industry. Like people in the insurance world, like if it's not the president or the IRS, we're probably one of the 3 most hated people in the world right now. But I mean, at the end of the day, like when insurance does what it's supposed to do, we really do help people and help ease a lot of the burdens they have. So I love being on the carrier side of it now, being able to do that kind of stuff.
Yeah, 100%. Very similar journey that I had as well. But tell me, or tell the audience, I know, but tell the audience about Sola and what exactly does Sola do as different than any other MGA?
So I know you had our mutual buddy Brian on a few episodes back talking about parametrics.
Yep.
We are a parametric carrier, but we're very specific. Right now, we just have a wind hail deductible buyback product. So we are going to come out with other products down the road. Basically, I think everybody in this market knows, especially if you're an agent, like it's tough out there right now. Carriers all over the place. I mean, we live in Arkansas. Hanover just announced last week or 2 weeks ago that they're pulling out of the state. So, I mean, we know in Arkansas, it's pretty rough around here. There's some other states that have it worse, but we're up there for how rough it is in this market. So carriers all the time are either pulling out of states or shutting down new business, or if they are writing, like they've got very stringent contingencies on what they want to accept with their clients. But on top of that, premiums, every day clients are calling into agents griping, my premium went up 20, 40, 50%, or now my deductibles on my policy, whether it's the wind and hail or the coverage A, my deductible is 2,500 or $5,000 or 2% or whatever it is. So all these issues. And before really Sola came along, there wasn't, at least on the personal line side, there was not a solution for this. It was like just basically like, hey, client Tom, you got to just suck it up and just deal with this because this is what it is. And it doesn't matter if you go to me or farmers or independent guy down the road, we are all dealing with these issues. So like, it doesn't matter if you.
I was, so used to be, you would think, Tornado Alley, or you'd think all that stuff was Oklahoma, and you would hear about all this wind gusts and whatnot. And, those kind of things. Even the movie Twisters, I just saw it recently in the theater, was based in Oklahoma. Now, over the last 4 or 5 years, we're seeing more of that weather pattern hit here in Arkansas. We had a massive tornado hit right here in Little Rock several years ago that we're still seeing blue tarps all over Little Rock 4 years later, I think.
Yep.
So maybe 3 years later. But and so talk to me a little bit and talk to the audience a little bit about, is that something that is there some fact set that you see? Maybe y'all studying the wind patterns and studying some of the weather patterns. Is that truly moving this way, or just feel like that because we had a big tornado recently?
So yes and no. So Texas and Oklahoma still historically, like you have years where Arkansas and what we call Dixie Alley now, which is Tornado Alley, but it even moves further south into Mississippi and Alabama. I mean, my God, it's 2025 now, but towards the end of 2024, during the holidays, the panhandle of Florida got hit with like 10 or 12 tornadoes in the panhandle. And the hurricane Helene and Milton that came through, they actually broke the record in Florida for the most confirmed like tornado warnings. And there was like 30 some tornadoes that spun off from that hurricane in Florida too. So like, yes, historically and even today, like Texas and Oklahoma and even Kansas, that's still like what is typically your bread and butter tornado alley, but it is moving all the time. They still have those. In some years they're not number one, but in some years Arkansas and Mississippi and Alabama are number one. But I think it was 2 years ago, actually, Illinois was the number one state in the country for tornadoes hitting in the state. Now, a lot of those tornadoes aren't as severe as what you have in the Bible Belt of Tornado Alley in Texas and Oklahoma. But like a lot of these Midwestern states from like Nebraska all the way over to Ohio are getting hit more and more frequently. Like Ohio last year, I think they had almost 100 tornadoes, and their yearly average is usually in the like 30s or 40 tornadoes in the whole state. Wow. So they had like triple of that. So
that's wild.
And you can get into that whole conversation too, like of climate change. But the thing of it is, like, it is upticking, but really what is making all these claims go further and further up is because so many people are moving into the Midwest and the Southeast where the cost of living is cheaper. And because we are just catastrophically, we're the huge area for cat events, whether it's tornadoes or wind or hail or flooding, whatever it is. We get hit so much more than like the West Coast or the Mountain West or the Northeast. So many more people moving into these areas are triggering so many more claims, which is just causing an exacerbated problem throughout the country with homeowner insurance and just insurance in general.
Yeah. And that's what I was kind of getting into, just to kind of set the stage here, because, as this hard market continues, to ramp up, and people keep saying, this is going to be the end. We're nearing the end. We're nearing the end. And I've gone on record on my podcast for 2 years now, maybe 3 years now, saying we're nowhere near the end. I think we're going to continue to get harder, or maybe not get harder, but we're going to continue to be in this hard market for a little bit. But a lot of it is due to the wind, due to wind and hail, due to, catastrophic events, due to, a lot of things. Obviously right now, as you mentioned earlier, we're at the beginning of 2025 and we've got, wildfires erupting like crazy, in California, where I've got some friends are, a lot of listeners that I've heard a lot from, and we're trying to do what we can to send relief out there and send money and funds. And we hear tornadoes busting through Little Rock or Oklahoma, or, hear about weather in Florida. So talk to me a little bit, as this continues, and we see this a little bit more, there's a difference, obviously, in wind and hail buybacks and stuff like that and deductibles versus what you guys are doing at SOLA. Can you talk a little bit about that and kind of the origin of that and where we're at on that?
Yeah. So like I said, our buddy Brian was on a few weeks back talking about Parametrics, and they have like deductible buyback products. Typically with true deductible buyback products, it is triggered by the underlying policy having a claim file. So in those instances, like if the client files a claim, and sometimes it just has to be filed, sometimes it has to be approved, but basically like when a file is claimed with their homeowner or commercial policy, that triggers automatically for the deductible buyback product to kick in. With us, we are not a true deductible buyback product. We function like that in a lot of ways, but we also do other things that are different too. So with us, like our coverage limits are between 3 and 25 grand, just usually depending on whatever the client's deductible limits are. But we use the data from the National Weather Service and NOAA, because anytime a wind, hail, tornado event, any of those wind type events or hailstorms happen, they put out these data models showing the areas impacted. That's basically what most parametric carriers use anyways, is they use a lot of these data models from our government entities. Sometimes they use private entities too, but in general, they use our government entities. Whenever those data models are put out, it's basically a map showing the areas impacted. So with us, it's not triggered by the underlying policy. It's those data models that shows the maps of people impacted. And once that happens, we proactively communicate to the clients through text, phone, and email saying, hey, it shows you were hit by this storm. do you have damage? And with us, all the clients have to do, because we are kind of a hybrid parametric too, clients do have to confirm that they have damage with us, but just a simple text or phone call or email back saying, yes, I have damage. And then we confirm with them whatever their bank account is to direct deposit into their account. So typically almost always within 72 hours of a storm hitting, the clients have money in their account. And they honestly, with us, they can use the money however they want, but pretty much every client always either fixes repairs or uses it to cover their deductible. So that's the main function of how our product can work. But also, a lot of these carriers, Arkansas's DOI this year, or actually last year, announced that they were going to allow carriers to go to ACV or scheduled roof policies after year 7. So a lot of these carriers, they're ACV policies already. So these clients have coverage gaps. So with us too, one of the functions of our product is you can use our policy. Say the client's deductible is $2,500, which is kind of the minimum floor in Arkansas now. You can cover their deductible, but still get a coverage limit with us for like 15 grand, so that they've got their coverage limit covered, but then they've got some additional money too to help with those coverage gaps that they have in their policies. Another function of this too, though, with us is, some of these smaller homes or commercial properties that their roof is less than 25 grand to replace, because our limit's 25 grand per building. So you could sell a client our policy for the max coverage. And if they get hit by one of these storms, they can use our payout to completely fix their roof and not even file a claim with their underlying policy. And we don't report to the clues, so we never negatively affect the client's underlying policies in any negative fashion. So in those cases, that's not the majority of clients, but in those cases, those clients can use our payout to fix a roof, not file a claim with their underlying policy, so they don't have a clue hit. They're not filing a claim. They got a brand new roof, and honestly, they're probably going to save money next year on their renewals because they get to update their roof to a brand new roof. So those kind of clients, that's an absolute game changer for them. So,
yeah. So, from what, I gathered, from Brian, and talking to him about what they do on the commercial side, I'm assuming it's the same with personal line side. It's not like a policy you can purchase. Like today you walk into an agency and you can say, hey, I want parametric insurance to be, start coverage now. It has to be something where you have to have these different parameters, so to speak, and 50-mile rate or 25-mile, and like all the different triggers and whatnot. Is that still the same thing in personal lines? And if you're talking to a group of agencies and agency owners and producers and CSRs right now listening to this podcast, whether in Arkansas or Illinois or California for that matter, how can we bring this down bottom shelf for them to be able to say, okay, how can I apply this in my agency now? How can I help these clients of mine that are paying 1% and 2% deductibles, or paying $2,500 deductibles, or paying whatever it might be? How can you help them to understand this a little bit better? Because you're a really smart guy and you're breaking it down pretty well, but there may be some ding dongs out there like me that may not understand. So if we can break it down.
Yeah. So to break it down, there's no service work for the clients to do. There's no service work for the agents to do, because we use that data. We are the carrier, proactively reach out to the clients. But from the agency side, there's not underwriting for you guys to do either. So our product, because we are like a hybrid parametric, there's no underwriting. You don't have to we don't have to build out the product for each individual agency. It's literally any of your clients, especially on the personal line side, but even on the small to mid-market commercial, literally all we need, agents go into our portal. They don't send us all of the paperwork to build out the product. They literally just get appointed with us. And we're just like most other carriers. They go into our portal, and all we need for an agent to bind a policy with a client is the client's name, their email, their phone number, and their property address. That's it. Don't care about
name.
Name,
email, property address,
and phone number.
Okay. But then when do they start to work with you on the triggers and like all those kind of things?
So the agents don't have to do anything on that, because we literally just use the trigger points from the National Weather Service when these storms hit. So
they don't get a chance to adjust it.
No. Okay. Now clients too, even if they're outside of those data models and they do have legitimate damage from these storms, if they reach out to us, if they submit some pictures to confirm damage, we will still take care of the clients in those instances. But that's the exception. That's not the general rule of thumb. 98, 99% of clients, they're not going to have to lift a finger outside of saying, yes, I have damage. And the agents don't have to lift a finger on the service side. They basically sell the policy, and that's pretty much all they do afterwards, because we handle all the service work.
And so, like I said earlier in the podcast, in Little Rock several years ago, we had a massive, tornado hit, come right through the heart of Little Rock, and
right down Chenal and everything.
Yeah, ripped through, so my very good friends were affected by that. So I would imagine if someone were to call you to get a quote, like let's say a week after that, that's not going to be able to happen. But if we're looking,
no, it absolutely will.
But they pay a whole lot more than now, 2 years past. No, explain how that works.
Yeah, so we have used decades of adjustment claims history over multiple states that we've been in. So we know, based off of this data that comes in from the National Weather Service, as well as these 4 decades worth of claims history, that these storms almost always, like there's always exceptions, but 98% of the time, based off of the data from this, we know that it's going to cause this kind of damage to their properties. So that's why our policy is basically fully underwritten, because we've used all the actuarial data from decades worth of adjustment claims history to where we are extremely confident in our premiums and our coverage, and that really those aren't going to change on that. We don't even care about claims history or the age of the roof or the roof material or the construction material or the age of the house. It's really just based off of the property, because we know based off of that data that if these storms hit, it's going to cause this kind of damage to where it gets a.
But it doesn't matter if it's a mansion or if it's a,
No, yeah, you're kind of thinking too like a homeowner policy,
right? That's what I'm saying, and I want the audience to understand. It doesn't matter, the built, doesn't matter any of that kind of stuff. All you're doing is covering the peril of the wind.
Exactly. We're just covering the peril. So you're selecting the coverage limit. And if that peril hits and triggers the payout from us, you're just getting whatever your coverage limit is with our policy.
And so it's kind of a supplemental. It's similar to AFLAC. That'll pay that deductible.
I always say we're kind of the AFLAC for your personal and commercial clients.
And so you're paying a certain amount to have that trigger and pay that $2,500 or $5,000 or whatever it might be to cover that wind hail deductible. Now, can that deductible or that number, whether it's $2,500 or $5,000, can that be adjusted up or down?
Yep, you can move it throughout the year if you need to. Like if the policy, if the client's underlying deductibles change, you can update that with our policy. And it will obviously change the premium, but
sure.
I'll tell you like too, with our bottom end, like a $3,000 or $5,000 policy coverage limit, you're looking at like basically like less than $20 a month for a policy with us.
So, so if you wanted to, let's say your deductible was $2,500, but you wanted to get $5,000, to make sure you cover some other things, similar to AFLAC, you could pay your, insurance deductible, your hospital deductible, but you may need to pay some whatever, other expenses, ambulance ride, or you may need to pay this, or I don't know. Same thing here. You can go over the amount.
Yeah. You don't have to set our coverage limits based off what their deductible is. That's what the vast majority of our agents do. But, these ACV policies, or if the client just wants some extra coverage for whatever, because, even too, like in these cat events, like if it's a tornado or the windstorm completely ripped the roof off of their house, they need to go get a hotel. And I know carriers cover loss of use, but I think we all know as a former agent myself, that a lot of times that's usually weeks. They have to pay out of pocket and wait to get reimbursed weeks down the road. And with 2/3 of Americans living paycheck to paycheck, the average client can't float a hotel stay for 2 or 3 weeks on their own while they're waiting to get reimbursed. So they can absolutely get a higher coverage limit with us and use it for immediate living expenses or whatever they need to get through that event.
Yeah, I like that a lot. And I think it's such a great explanation to be able to, because people understand, they've seen the AFLAC duck for years, and to be able to understand supplemental insurance, and they buy it, through their employer or whatever it might be. So to be able to have that comparison in their brain at least helps to understand a little bit more about personal lines, parametric insurance. And, the other thing that I think I'd love for you to talk to for a minute is the fact, I'm assuming this is right with you as well. When I talked to Brian about this a little bit on the commercial side, Parametric insurance, like a lot of things, is in your world, is it's not, regulated by, you mentioned the insurance department and things like that. It is completely not regulated by that, but there's still some laws and regulations and rules you have to follow, but they're not. So for those that may not understand some of that, could you explain a little bit about what that means versus, the highly regulated, things that we hear about on a day-to-day basis with the insurance departments and whatnot, whatever state you're in. This is not regulated there, but it still has to be mandated.
Yeah. So I will tell you, like with SOLA, we are fully admitted with every state's DOI
okay.
that they're in. Yeah. So we are kind of unique in that as well, because most parametrics, they are on the E&S side, excess and surplus. So there's not the DOI regulations, but they still have the regulations that they, you can't just go create a pyramid scheme and scam people out. There are still like regulatory, checks and balances in there to check on that stuff, because you can't just make up whatever you want. So like, I'll tell you, there's some carriers out there that have tried to create other products, and that they've tried the certain, like Georgia DOI, there's a carrier out there. I'm not going to bash any people or anything, but they tried to get admitted, but the Georgia DOI wouldn't let them, because they basically said what you're doing is basically illegal, like how you're trying to build this insurance product. So I mean, and even on the E&S side, it's not that there are, regulations in there too. I mean, they open themselves up to lawsuits if they don't follow certain foundational principles within the, the insurance product world.
Yeah. I appreciate you breaking that. I didn't realize that you guys were admitted in that, and that's really awesome.
That's something that makes us really different from most other parametric carriers, because pretty much almost all parametrics are E&S.
And with the simplicity of it, so to speak, once you do break it down a little bit to the way you have, which I appreciate, is this something that an agent could quote for their client right through a portal on your website? Or
I mean, they have to. Yeah.
Okay, so they don't have to talk to anybody.
No, they don't have to talk to us. They don't have to send in info or any of the underwriting,
like you said,
details,
name, address,
email, and phone number.
Yeah.
That's it. Like literally, it takes less than 5 minutes to quote and bind a policy with us.
And the other unique thing is that people don't quite understand is you hear a lot of the stories of, with when you're in a situation, heaven forbid, with insurance, and you have a claim, you have a tornado, you have a situation where you have a trigger for a loss, you might wait a little while to get your payment. You might wait a little while, not because the insurance company's hating on you and they don't want you to have your money. They just have their red tape and they have to investigate and figure out things. But with parametric insurance, it's almost instant.
Yeah. So I'll give you a personal story. Our first 2 claims that we paid out, we actually went and saw the clients in person. It was one of our top 10 selling agents in the country when we just had the tornado. I mean, tornadoes rolled into our win in hell now, but we first launched with just a tornado product. The Nashville tornado that hit in the holidays of 2023. Our top 10 selling agent had sold a bunch of policies, and 2 of her clients got hit by that storm. We had checks in the client's, well, not checks. We're all digital, but like basically we had checks in the client's hands in under 72 hours. Like we literally went to go visit the clients just because they were our first 2 clients we ever paid out. And they were so ecstatic because they literally had the money from us. And we actually saw them in person before they'd even filed a claim with their underlying policy yet. So they had enough money to cover their deductible, and they had a couple grand left over that they could use however they wanted. So like they were absolutely in love and made their agent look like a superhero because they had offered this product and they took it up. And that agent actually was like bombarded the next 2 weeks because all the clients she had, offered it to that kind of balked at it. She had like 120 some policies sold the next 2 weeks because all of her clients that had said no initially started calling in and drove. Did I get that tornado policy? I need that right now. So it makes the agent look like a superhero too, because like it did what she told the client our product was going to do. Like, hey, they pay out within a couple of days. You're going to have the money right away. And sure enough, we even saw them in person before they had filed a claim with their underlying policy.
That's
so
awesome.
They said, I didn't think insurance could do this. I'm absolutely ecstatic, and I'm going to keep this policy for the rest of my life. Because like it, even if I never get hit again, like the fact I know I've got something like this that is going to trigger almost immediately and give me money to help me get through this cat event a little less stressfully is just a game changer for me as a client.
Sure it is. Because again, you could turn around and pay that deductible right away, or you could use it to pick up some groceries if you need to, or, help out a friend, or, it doesn't matter what you're going to use the money for. It's your money.
Yeah.
And so I think that's really cool too, that people can wrap their heads around that eventually. And, until today, really, Brian turned a light bulb on for me, but now look at this, 3 Arkansas boys knowing something about parametric insurance. And people say
a bunch of hillbillies from the Ozarks,
I know. People say that we don't, that it's such a difficult thing and it's hard to understand parametric, but you really helped me to really understand it a lot better. And so thanks to you and Brian, and hopefully the audience understands it a little bit better too. So talk to me, similar question to what I asked Brian. I know you listened to that episode. What are some scenarios, and like, how could you talk to agents right now? Like, they got a client in front of them right now and they're talking to them and they're looking at, a quote that they've got to give out, and they have to quote them a 2% wind and hail, or a $2,500 or $5,000, whatever, a large deductible. How can they best introduce parametric as a solution? Because it's going to have a premium additionally.
Yeah.
Do you upsell them to a $10,000 deductible with their insurance company and then backfill that with the parametric 10,000? Like, what do you suggest? What are you seeing every day?
Yeah. So what most of our agents that are already selling this product, what they do is, it's just stats. I don't care what people think. This is just the cold hard facts. It's 67 or 68% of Americans live paycheck to paycheck now. Mm-hmm. And a lot of those are even your white collar upper middle class that combined make 6 figures in the family, or double 6 figures, but they still live paycheck to paycheck. So even a lot of your upper middle class clients, they can't even afford a $2,500 deductible because they have less than $500 in their account right now. So sure, if a cat event happens and they get hit by one of these wind hail events, it's one of those things that, like, hey, Joe, like, what are you going to do if a tornado comes through tomorrow and hits your house and wipes it out? Like, well, my insurance is going to cover that. Yes, I understand that, Joe, but you do understand you have this deductible, whether it's a standalone wind and hail or a coverage A. Like, how are you going to pay that $2,500 deductible, or that $5,000 or 2% of your $1 million home, which is $10,000 or $20,000? Where are you going to come up with? Well, I ain't got that money. If they're honest with the agent, most of those clients don't have that money. Okay. For most of my clients, hey, for less than $20 a month, I've got this policy that is going to come in and kick in, and it's going to cover your deductible. So you don't have to worry about where you're coming up with that $2,500 or $5,000 or $10,000, whatever it is. I've got this policy. I can get it set up for you in less than 5 minutes. We can put it into your mortgage if you want. We can do monthly, whatever it is. Yeah. So we've actually saved 4 deals already in these 4 months where the mortgage company required our policy to allow the clients to close on the property. So, that it's pretty simple too to pitch it. Like, hey, most of my clients, if you don't have this money, do you have $5,000 sitting in your account right now to pay your deductible? If the answer is no, I've got this product for less than $20 a month that will kick in.
And that's the thing. I think, including myself, people listening to this probably thought parametric's going to be expensive.
I mean, it's really not. I mean, sometimes it is, but I mean, like,
no, but what you're talking about,
what I'm talking about is not. Brian plays with the big boys. We don't do that. Like,
but like, you're talking your average, 3-bedroom, 2-bath home in Arkansas, Oklahoma, California, Kansas, wherever, that's something that you're probably going to be running that range of $20 to $50 a month or less. And people probably think, oh, well, that makes sense. Similar to Aflac, people think it's going to be super expensive.
And a lot of clients, they're not used to this either, because, for years and even decades, like 500 to 1,000 was the deductible, and that's what it was. It's been that way for years, if not decades.
Yeah.
So now these clients are pissed off because even they've got a $2,500 deductible. Well, I'll be honest, like Nostradamus, like, I can't predict everything, but I would bet my title to my house in the next 5 years, 2,500 is no longer going to exist either.
Well, I was going to ask you, what happens if it does, for some reason, go the other direction and go back to the 1,500, whatever?
I mean,
Is parametric still a thing? I mean, do we still have that, or you think it's going to continue to go the other direction of
I,
5,
I,
10?
yeah, I truly believe it's going to continue to go the other direction because for years now, carriers as a whole in this industry have taken a net loss. Like, and they're not going to keep, eating losses year after year. And roofs are the biggest claim in the country. Like, that's the number one claim is roof. So like they're going to keep increasing these deductibles to get these clients away from also just trying to use their homeowner as a maintenance policy. A lot of clients have thought for years, like, well, I didn't do anything. We've had 3 hailstorms in the last 15 years and it's time for me to get a new roof. Like, if you didn't file it on the first one, like, honestly, like it's still up to the clients to maintain their properties. Like, you don't
Yeah.
go file a claim on your auto insurance because your tires are bald now. That's a maintenance thing. Like, you need to do things to keep up and save money back for your roof if it's not actually hit from a natural disaster. Like, you need to be saving money back, and clients aren't doing that. So like, we've got to do a good job as an industry as a whole to really educate our clients that homeowner and just insurance in general is no longer going to be allowed to be a maintenance policy. It's there for catastrophic type things anymore. So,
Well, yeah, I was going to ask you that. So, do you see a world where fast forward however many years that, let's say I got my house paid off in 12 years and I no longer am required, so to speak, through my mortgage to have that insurance, because it's paid off. Do you see a world where someone says, you know what, I'll see if I can get a parametric policy for 100K?
Yeah, I absolutely think that's
just
going
to just to make sure that I can at least fix up some things and take a dent out of it. Do you see that happening?
I absolutely do. Like, I don't know when, but yeah, 5, 10, 15 years from now, I think that's going to be a thing, especially with inflation and insurance and everything keeps going up. A lot of clients, like especially older ones, they don't want to insure their home anymore because it's, do I insure my home or do I get my insulin? So,
Right.
my house is paid off, so I'm just going to risk it because if I don't get my insulin, I'm going to die. Like, I'm not going to die if I don't pay my insurance. So you're going to start seeing this, I think, down the road. Just my personal opinion that you're going to start seeing some of these clients that have their homes paid off and aren't required to have insurance, that they may start looking at parametrics as a route to have a cheaper option, that it's really just there for kind of the cat events to come in and give them some money to help get through that time. So
yeah,
I mean,
100%.
I'll tell you too, like, going back to the whole maintenance versus cat, what insurance is really designed to do anymore. A lot of our coastal agents, whether it's Texas, Mississippi, Alabama, Florida, the Carolinas, Georgia, any of those people, most of these clients, this is the norm already. They already have deductibles that are 20, 30, 40, $50,000. So they already know, like, they are literally only going to use their insurance if they get hit by a hurricane and it wipes their house out. They're not filing claims for $10,000 because their fence line got blew over or whatever, a tree fell on a part of the roof and it's $7,500 to fix it. They're not using it for that. They know that they're going to pay for that stuff out of pocket because, one, like, they can't afford their deductible, and two, they're probably going to have their premium go through the roof anyways after that, because that's just the norm for the coastal clients. And I think, just my opinion, like I said, I'm not Nostradamus. I can't predict the future, but I really think
Right.
that's the wave of the future with insurance, because carriers don't want clients that file claims on anything and everything. They don't want these clients that file
Right.
$5,000
Well,
claims or wind repairs all the time, or window repairs on their auto, because they got a chink from a rock on their window, they don't want them filing claims or getting their tow assistance all the time. They've had 5 tows in 2 years. So that
well, that
stuff is
was my
going to
next
die off.
question. Right now, at Solo, where you're at now, you guys are mainly doing or only doing, the wind and hail type things. Do you
Yep.
see a world where you guys or personal lines parametrics or parametrics is expanded beyond that to maybe you're covering more water and more flood
Oh,
and more
absolutely.
and
Yeah.
maybe even some more auto type things if you're going to stay in personal lines, and maybe you get into some of those things? Do you see some of that?
Possibly auto. I'm not for sure on that, but I can tell you we are a natural disaster carrier. We're not a wind hail carrier. So wind and hail is our first. So, I mean, we want to have
But
a
you
fire.
do see a
Yeah.
world where you could do fire and
Oh
flood
yeah,
and
absolutely.
earthquake,
We're
maybe
yeah,
even. I don't know.
wildfire / fire,
Yeah.
earthquake, flood, hurricane, all of these things. We're even going to look at having like a freeze product down the road too. So I mean, we want to be a full encompass natural disaster carrier. So if you're anywhere in the country that has a natural disaster that occurs somewhat regularly, we eventually down the road, I don't know what the whole time frame is on that, but we want to have a product for every natural disaster in the country.
But you don't see anything like a smaller type thing for like windshields for cars or for,
I mean,
little things like that. Because even auto insurance, the deductibles are going up a little bit too.
Yeah. I mean, I don't know. We're so focused on the home side, at least on
Yep.
this with
Yep.
this. It may be, I don't want to say no or yes, but I mean, it's a possibility. Anything's open. I mean, when I first came on board, we even talked about way down the road, even actually coming out with an actual home insurance
Yeah.
option way down the road. We even want to eventually be global to where we go into other countries and other continents. So,
Well, I mean, that being said, can you do, someone like myself who has a couple of rent properties or a couple of, income producing properties, does that fit under what you guys do? That
oh
umbrella
yeah,
up there? I could
absolutely, yeah,
put in
absolutely. I can make it. We can
the
make a
same name,
scheduled
email,
policy.
and phone number, but it'd be a different
Yep.
address for
Yep,
all of
we
those.
can
Is that
make
how it works?
scheduled policies. Absolutely. So all the time. I've
Even
got
if
my
they're
agents.
spread out in 5 different zip codes or whatever, it doesn't really
Yep,
matter.
doesn't really matter. I mean, each address will get a payout based off where they're at. So
Okay. Will it be 5 different bills or would it be one bill?
no, like we can make a scheduled policy. Like if it's under 5 properties, we usually have our agents just quote them individually. But if you get north of 5, we'll make it like a scheduled policy for the agent and the client.
Yeah. Very cool. What am I missing? What have we not told the audience about? Because you have completely clear as day for me. Like I can see clearly now the rain is gone. I understand completely what you're talking about here, and that's a first.
Yeah.
Brian, he did it better than you. Sorry.
Oh, he
But,
did. Well, that guy knows his stuff like the back.
No, I
of
was
his hand,
I was
like,
telling Brian you did it better than he did.
oh,
I'm just
okay.
kidding.
Well,
No, I'm kidding.
hey, I
No,
love Brian. I've gained knowledge from him. Like he's a very valuable.
Oh yeah, I texted him before I went on with you, and I was like, "Hey, I'm going to record this guy. Talk to me." He was like, "Man, you'll get a lot out of it. We've referred each other business. Good guy." So yeah, between the two of you, hillbillies from Arkansas, we got this. We can figure this out.
Yeah. What I will say that I haven't yet is, and this is just like as an industry as a whole, is like parametrics isn't going away, and natural disasters aren't getting less frequent.
Nope.
And carriers don't want to cover risks that they used to cover. So like if you're going to be, I mean, I don't care. Like I kind of hate the term because then they just use it. But if you're really going to be a true risk advisor to your clients, the days of just selling a home auto bundle are no longer existent because what clients think their policy is going to do does not do that anymore. So you're going to start seeing, whether it's us or another competitor or whatever it is, you're going to have to start seeing a lot of clients having these policies that have at least one, if not a couple little supplemental policies wrapped around their home or their commercial property so that they have the full coverage that the client thinks that it actually has. Because what they think they have right now with homeowners isn't what they think they have. So, and if you're really doing your due diligence to educate your clients the way that the market is and the way that insurance is going to work moving forward, you either need to get with the times and start looking at these things. And if you don't do it today, you need to have a plan to start implementing some of this stuff because you're going to get left by the wayside for all these other independent agents out there that have these products. And then they come to you. Well, I got a quote from Tom and Joe down the road and they've got this other product and blah, blah, blah. Like what can you, well, I've just got this. I've just got your home and auto bundle.
Yeah. So it could be a lead in. It could be a lead in for sure. As a great prospecting tool as well. So it could also, for those that subscribe to the wedge technique, it could be an easy wedge to be able to say, hey, is your current agent offering you this type of coverage? Are they offering you this? Can you cover those deductibles that they're charging? And it's also a way to sympathize with them to say, hey, man, I get it. My own carrier, made me pay a $5,000 deductible or $7,000, whatever it might be, 1%, 2%. I get it. The best way that I handle it is I have parametric policy and I pay $20 a month. And if something were to happen, blah, blah, blah. So it's a way for you to be sympathetic and get an upsell or a cross sell or a good way in the door. So
yeah,
I see parametric as a great prospecting tool.
Yeah, absolutely. Like I can't tell you how many of my agents have won over new clients because they have it. Nobody else
Yep.
in town or in their area has it. So
if they want to have it and they want to
Yep.
get in touch with you, what's the best way to find Sola, Caleb, your team of 9 strong, and keep it on? By the time this comes out, it may be 12. Who knows?
Yep. Well, we're hiring a couple of new. We're already hiring other people right now as we speak. So by the time this podcast comes out, we may have 1 or 2 more people on the team. So
talk to me about how they can find you. What's the best way to get contracted with you and how that works?
Yeah. So the best way to get contracted is just to reach out to me directly. Honestly, it's Caleb at Sola Insurance, which it's CALEB at Sola SOLA insurance spelled out.com. Or you can call me on my cell at 417-224-2460. So those are the 2 best ways to get a hold of me. So like if you go to our website and say you're interested, they're just going to revert me back to me. So you're just taking extra steps in the process. So
yeah. So solainsurance.com.
Yep. Solainsurance.com is our website. But yeah, those are the 2, email and text or phone, either way, are the best ways to get a hold of me. I will tell you too, our whole distribution channel is the independent agent. So we don't do captives. So I don't know how many captive agents you have on your podcast, but we only do independent agents right now. So that's
perfect.
Our whole bread and butter. So if you're an independent agent, we're in 8 states, growing to 17 by the end of the year. So if you're in the Midwest or Southeast, there's a pretty good chance that we're in your state. So if you're one of those agents, reach out to us.
Perfect, man. What a great conversation. Light bulb was on for me, and I felt it click on for a lot of people. And I heard that little click for a lot of people listening. That light bulb was on, and they can understand a little bit more now. And there's a lot of people that I'm hoping are going to give you a ring-a-ling-ling and figure out how they can get this as an option for their clients. And again, I think it's a great lead in. I think it's a great tool. I think it's just a good thing to have. It's something you can feel good about offering. I mean, you can feel good about offering insurance, but again, it's something you could say, you know what, yes, it's going to cost you a little bit of money, but at the same time, when you're in a pinch and you're in a bind and you can't afford that $5,000, but that's the last thing you want to come up with, bro. I got you.
And it takes on average 20 years of our premium to equal what our payout is for our policies. So, I mean, if you live in any one of our states, like the chances are you're playing Russian roulette at that point if you don't have our policy, because there's a pretty darn good chance that you're going to have a claim in the next 20 years when hail related.
That is a great stat. So now let me ask you one last question. If someone's getting started, their first time, presenting this or selling this, could they give you a call to help you, or you help them kind of present this? Or
oh, absolutely. Like I work all the time with all of my agents, what's working for them, what isn't working. So like I may not have all the answers, but I know what works most of the time based off of what my current selling agents have done and what isn't working. So like, yeah, I'm always there. I'm still the territory rep for some of our states. So I still work directly with a lot of our agents. So I'm always there. I'm not the guy that you're going to get onboarded with and then you never see me ever again. So I still do quarterly meetings with all of my reps. I had 3 today. So
perfect, man. I really appreciate it. I'm going to try to push this out as quick as I can. Great episode. Good job, buddy. Thank you for coming in. Glad we could finally get this done.
Yeah.
Go Tigers and woo pig.
Yeah. Woo pig, baby.
Woo pig.